My name is Sid Shaker. I'm the co-founder of Token Analyst. We're a London-based blockchain data startup, and what we're focusing on is tracking everything that goes on the blockchain, on public blockchains, on Bitcoin, on Ethereum, on Binance chain, and several other chains. And not just tracking the actual transaction activity, but also lending context to these transactions and offering a layer of semantic meaning to what's actually going on the blockchain. And so, in the theme of DeFi and crypto in general, most of crypto today is about making money. And in our time just watching on-chain data, we've seen a lot of different interesting patterns and behaviors by individuals on-chain that are essentially just ways of capitalizing on different opportunities available to make money on-chain. And so just wanted to share a bit of what we've seen today, just in light of the theme today, and hopefully it inspires some interesting ideas and opportunities for further exploration after the talk. This is in essence the DeFi ecosystem as a whole today. This is each of the colors represents different DeFi applications. So like the green is Compound, for example, Compound V1. The light blue is Compound V2. Each of the nodes are addresses, and each of the edges are the lines between the nodes are function calls, transactions, or events between smart contracts and addresses on the blockchain. And so, this looks pretty cool, but in essence, if you really boil it down, it comes down to this. It's really, from the beginning of 2019 to today. These are the unique addresses that have interacted with these smart contracts on the blockchain. So this is on the Ethereum blockchain. These are what people may think of as some of the most popular DeFi applications. And you can see, in reality, it's not that big of a community. It's really only about, once you account for certain addresses belonging to the same individual, it's only about 10,000 or so people all over the world who ever interact with DeFi, who have ever interacted during the course of this year. And so it's a pretty small community. And what's interesting is, amongst this community, there's a lot of intermingling as well. You see the overlap between Maker, Uniswap, and Compound, and Synthetics, and Uniswap, for example, which basically means that the addresses that are interacting with these services are also interacting with other services at the same time. So it's a lot of intermingling going on here. And so just an overview of some of the different quote-unquote strategies we've seen on-chain. One, it's a really simple one. It's just interest rate arbitrage. So you borrow DAI at 14%, and then you lend it at 15%. Likewise, you could do market making on Uniswap. We've seen that explicitly occur. Several addresses, even over the past week, we've seen doing that, where they progressively send in more liquidity as the price changes in order to maximize their gains. Likewise, another simple one is borrowing and then trading on DYDX. We've seen the same addresses that interrelate with these different protocols essentially swap funds between these different projects and acting on these different projects by calling different function calls on DYDX to trade. Same thing with market protocol, just exposure to different assets, especially to BTC and ETH, without actually buying BTC and ETH. We've seen that quite a bit. An interesting one, it's a recent occurrence, but the increase in like physical fiat currencies being traded on Synthetics. So the JPY and the GBP Synthetics tokens have been traded increasingly over the past few weeks. And then last but not least, it's the whole mempool side of things. So the mempool is essentially whenever a transaction is broadcasted, we see the transaction come onto this thing called the mempool first before it's actually included in the blockchain. And so what we've seen a lot of people do is essentially use a latency advantage by running several blockchain nodes and track this mempool to see when they can have stat arb opportunities between prices, between DEX orders, between protocol inefficiencies, all kinds of different opportunities available there. But if you go into the overlap, as I said before, it's only 10,000 addresses overall. Oh, that's you right there. Yeah, that's Freddie. So it's probably Freddie that's interacting with all these different addresses. But surprising thing is, there's only 2 addresses in the entire block, in all of Ethereum, over the course of 2019 that have interacted with all of these different protocols. And so one of these addresses, we just observed a day in the life of this person. This is August 11th, 2019, just a few weeks ago. And so what did this person do during the course of the day? This all happened actually between 2 hours. Only in 2 hours of the day, all of these actions happened. So first, they transferred the ownership of a CDP to a smart contract that they had created earlier. Then they deposited USDC that they had into Compound in return for CUSDC. Then they send Ether to a set protocol rebalancing contract, swapped the ETH for CDAI on Uniswap, deposited the CDAI into Compound in return for DAI, and then went on to trade DAI in multiple DEXs. So it's like next level arbitrage that's going on between all these different protocols that was happening just over the course of 2 hours by this one individual. So this is obviously the power user that we're dealing with in the
Profitable?
it's hard to say, but when done at scale, it definitely is. So this person, this address in particular, was dealing with around $100,000 worth of DAI. So small fluctuations lead to some profit. And specifically, he was trying to arbitrage DAI versus USDC and the CDAI versus CUSDC arbitrage opportunities, especially between all these different protocols. And DAI actually is the kind of the king in terms of stable coins, we would say, because just in terms of trading volumes on DEXs, it's almost 10 times more than USDC. And even in terms of the growth, it's it's about a similar growth pattern, just with ETH price going up, but it's really significantly greater. And that's kind of been the trend that's been present throughout the whole year that we've been seeing. Just DAI being the main gorilla in the room. And speaking of gorilla, the elephant in the room is Compound, of course, because you see it's the biggest one here. 11,000 of the 15,000 odd unique addresses over 2019 are Compound V2 interacting addresses. So who are the kind of whales of Compound? So looking at the top DAI supplier of Compound, this individual right here, he or she supplied 400K worth of DAI to Compound through the history, throughout Compound V2's history, and then the top borrower borrowed 670K worth of DAI, and it was actually 6 times larger than the next highest borrower. So this is obviously a huge kind of whale on chain. And so we were wondering, who are these individuals and what are they actually doing with doing the supply and doing the borrowing? So looking at the supplier, it turned out it was a StableWire smart contract that was last active 188 days ago. So theory being they were one of the initial liquidity providers, and so hence to kickstart the ecosystem, provide some supply, much needed DAI supply. And then the lead borrower actually did turn out to be an active trader. So he or she or them has $4.8 million of ETH locked up in a CDP right now. And then over time, over the course of August, we saw them or he or she deposit 100K DAI in chunks to DYDX and saw them trade pretty extensively on it. The obvious takeaway is the DAI was borrowed for good reason, to make profits immediately afterwards, it's really not trivial to implement these strategies at scale. All these addresses are kind of maximizing on opportunities that are kind of one time or one time across a few weeks, not necessarily doing these strategies on an intraday or intra-hour level. which is really, really hard to do. So we haven't seen any sophisticated examples on chain of quant strategies at scale over the course of the year at all, in fact. And reason being is it's just really hard. So it's a little look at our data infrastructure. So we run several Ethereum nodes. So these are full archive ETH nodes, blockchain nodes, not just for ETH, but for other blockchains as well, costing us well over $10K a month just to run the nodes. And not just the nodes, but then you have to actually parse the data. So every transaction that comes in, we have a account-based and a UTXO-based extractor that extracts the meaning from this data. So is this a whale? Is this a bot? Is this a smart contract that's associated with Maker? So on and so forth, adding the context of the data, and then streaming that data real time via WebSockets or via an API, and then combining that with off-chain data, price data, order book data, so on and so forth. So it's a pretty hefty infrastructural component to even access the data at scale, let alone execute on it. So that's a big portion. And so a little bit of what we're doing, we're providing signals and just insights on what's happening on chain on a real-time basis via WebSockets, via API, and also via our web platform. So a little bit about us. Yeah. Any questions? Feel free to ask.
Quick question. Why do you want to have a graph structure? You don't actually. Oh, sorry.
Sure. No worries.
Yeah. Right. Sorry, I'm just being a bit cynical.
Yeah.
You are having a graph database to do that. That's pretty, how could I say, inefficient for doing really fast operations.
Yeah.
You really don't need a graph. Why do you need a graph?
Yeah.
Sorry to be very cynical, because I've built platforms, so I know
100%.
that's just, very, very, very slow. And if you want to update your graph for any reason, that's a nightmare. So why do you do that?
So it's a great question. It has been really slow for us. So
I know that. That's why I was asking.
So the question being, why do we use a graph database? So particularly we use it for UTXO chains for Bitcoin. So this is to do clustering of.
It's a smaller subset in that.
It's a smaller subset, much smaller subset.
So you could actually take it out and.
Yeah, we could, but it's just really easy to do clustering of addresses. So there's this heuristic called shared spending on Bitcoin, where we can then see who are the same entities with a single script. So that's the only reason. Other than that, most of our stuff is pretty distributed. Yeah.
That's like, you have a tiny address space, and you're optimizing your whole design for.
For sure. Yeah, for sure. Yeah. Any other questions? What's up? Yeah.
Do you think it's possible? I think we spoke this when I was speaking earlier. Do you think it's possible from on-chain data you'll be able to back out the sophisticated quant strategies in the future? So there isn't any currently sophisticated quant strategies on chain. These are 1 to 3 week events. A person in the audience asked you whether it's possible to check whether those trades are profitable. Do you think further down the line you could potentially back out the strategies that some people are using?
100%. So just to repeat the question, is it possible to back out of strategies that people are using on chain to see if it's even profitable or not? So it's tricky, but it's definitely doable because every transaction and every function call and event is on chain. So we've tried doing that for ad hoc cases, especially the significant borrower when they were depositing into DYDX to see what they were doing with so much money. So I mean, it was in batches of 100K DAI and also 100K USDC. So it seemed like a pretty automated strategy. It didn't seem like a human being behind it. And basically they were capitalizing on slight fluctuations in CUSDC and CDAI volumes and prices. And so, it's totally doable to see, their realized gains over the course of a time period because the data is there available for you. It's just a hassle to get it together. And that's what we're trying to do. Yeah.
Quick question.
Yeah.
Right.
Sure.
Another cheeky questions. Has any of the legal entities, as in who, asked you any questions yet?
Yeah, so the question was, have any of the legal entities asked us any questions yet? They have, actually. So it's, yeah, I mean, mainly to do, investigations, ad hoc investigations into certain cases. And, the data is available. It's just the problem is auditing it and at scale. And, we're trying to do that. And the graph database kind of helps for that, to be honest, where you can just click and drag and go through different addresses to see who's actually behind it. So it's pretty interesting. So yeah.
Do I need a, or should I shout?
Yeah, sure. I mean, it's up to you. Yeah.
So my question is, how granular have you gotten, and do you think you can get into abstracting sort of human behavior from on-chain transaction behavior, and kind of clustering that in different types of profiles?
Yeah. So I mean, in terms of your question, how granular can we get in terms of human behavior and compare that with on-chain behaviors, right? And
basically looking at an address and the type of transactions it engages in, and then overlaying other types of data on top of that, and then making an inference about who that is, what's their motivation, or kind of abstracting it to a behavioral.
100%. Yeah. So we've actually done that for a few archetypes. So we've done that for market makers, for arbitrage bots on chain, and then we've done it for kind of whale, quote unquote, whale addresses. So whale addresses being those who bought in early into some of the tokens and into Bitcoin and into ETH, who have held on for several years and then suddenly start liquidating. What's their behavioral profile like? How often do they transact? What times of the day do they transact? What exchanges do they deposit funds into? We can see all of that on chain, and we provide that data. So we have a kind of a behavioral profile of these different entities.
And how much further do you think you can?
Can you use the mic?
Sure, yeah.
Sorry. Yeah. So how much further do you think you can get, or just projecting things in the future? Do you think you could get far beyond these 4 basic archetypes? And if so, what are sort of the 1 or 2 key pivots that would potentially get you there?
I mean, yeah, we can definitely get beyond these 4 archetypes. It just depends on the type of categorization you want to do. So I mean, these archetypes are kind of higher level ones. There's much lower level ones like miners, like smart contract creators, for example, on ETH. So like, and then there's even lower ones like just addresses in general, addresses that transact 100 times a day, for example. Like whatever bucketing you want to do, you can do that. We have like a querying interface for you to do that. But I think the more granular it gets is in terms of the more interactions there are. So in Ethereum, there's this concept of an internal transaction. So we've seen that quite a bit, where you send funds to a smart contract, but that contract sends out 100 different transactions of ETH to different parties. And those internal transactions are actually the value transfers where economic value is being made. So those are what's been most interesting for us. How do smart contracts behave and impact domino effect for the price?
That's super interesting.
Yeah.
Have you noticed any weird mixer activity in the research that you do, in the data that you look?
Yeah, plenty.
Yeah?
Yeah, especially in ETH. I mean, there's a huge mixer. I think that's common knowledge for some of you looking on-chain data, but there's extremely huge mixer on Ethereum, on the Ethereum blockchain. And then also several exchanges. So we've done extensive work on mapping exchange addresses into different types of addresses. So it's kind of unrelated to this, but we map like cold storage addresses, hot wallets, client wallets, the ones that you deposit funds into. And so some exchanges use mixers to obfuscate those internally. So using these router wallets. So when you send funds into an exchange, it mixes it and then sends it eventually to a hot wallet. So we followed that trace. Yeah.
Thanks.
Yep.
Hi, thank you for that. I missed the first part, so maybe that was covered. But when you reach these places of mixers, or the places where a lot of activity is happening and mixing together, can you actually reach the points where you start matching the transactions across chains, like to see the funds traversing from Bitcoin to Ethereum and starting to connecting these in clusters, or you always operate within a single blockchain space?
Yeah, that's like, so the question was, I mean, can we see cross-chain interactions via on-chain data? It's really hard. We tried it, just because, there's very few places to match on when you do transact. I mean, even between different protocols, like timestamp is one area to join on, but other than timestamp, behavioral patterns, like he was mentioning, is another area to join on. So we have to find commonalities between the two different chains to see, oh, this is the same actor, right? So in terms of tangible joining points, it's been hard to find those at scale, so we can confirm, okay, this behavior happens over and over again. It's probably the same entity on these two different chains. So, yeah.
Sorry, just to follow up, do you ever try to match it also with off-chain data like IP addresses or the network traffic?
That's one thing we haven't tried, but that's definitely a way forward for sure. Okay. I think you had a question? Yeah.
What's been the most surprising finding for you since you did this?
The DeFi stuff?
Yeah.
The surprising one was, the people that are interacting with these different protocols at once. So particularly, the folks that interact with Synthetics and Uniswap. There's probably like around a few hundred, Uniswap and Maker. Like, what are the intersecting parties doing, and who are they actually? So, I mean, the guys who interact the most with Compound, with Maker, are usually part of their teams who have interacted with the smart contract several times during the initial setup phase, or even during the ongoing maintenance phases. But the guys who interact with multiple protocols, that's where it's been interesting, where observing their patterns and seeing what they're doing with it. Some of them are like hobbyist users who just want to experiment with different protocols, but some of them, turn out to be kind of whales.
Do you think an increase in composability is going to increase that number, or do you think it's going to be something else?
Yeah, 100%. Yeah, there's already dApps out there that are moving in that direction, and then a consolidation as well, right? With Dharma using Compound and so on.
One more tricky question.
Yeah.
I mean, you said you don't do any IP geolocation. Do you do temporal? Mm-hmm. You know that if you do temporal, you can pretty much figure out a lot of those things.
So the temporal stuff we do is like on the blockchain, everything that's recorded on the blockchain. Okay. So the main focus for us is block times, mempool propagation times.
No. What I'm saying is like time zones.
Yeah.
Plus the delta T for confirmation. It should give you like a pretty reasonable idea of where people should be geolocation wise.
Yes.
And if you do that over multiple protocols, you should be able to figure the person down.
Yeah, I think
there are similar attacks on Tor.
Right. I think that's a valid strategy. But the thing we've noticed though is, a lot of these bots, like majority of trading activity is driven by bots, which are 24/7. So regardless of, unless it's an actual human whale transacting, it's hard to narrow that down at scale. Yeah. I'm just talking at scale. I'm sure we could do this for individual cases. Yes. Yeah.
Hi. Yeah. Do you have any insight into what the borrowed DAI is generally used for? Because just when I discovered the space, that's what initially made it seem a bit too good to be true. It's like, okay, I get that I can earn 10% because someone's borrowing this for 15%, but who's paying that? I'm assuming it's margin trading or some short-term lending.
Majority is for margin trading.
Okay.
That's been the conclusion from the data that we've seen. Mm-hmm. Right. Directly into DYDX and other margin trading venues. Yeah.
Also, thinking about who interacts with DeFi, to what extent are big ICO wallets from 2017 that are still not liquidating engaged in DeFi?
So in terms of active engagement, we haven't seen too many. We did a big ICO tracking initiative of all the largest treasury wallets. Most of them have just staked funds. So funds held in CDPs, funds held in liquidity pools, like just that are stored, stashed, and not actively trading or engaging with these protocols. So there's a significant amount of funds, but it's kind of staked.
But they have deployed.
Oh
into,
yes, 100%.
Yeah.
Into CDPs especially, Maker CDPs.
And do you have a recent sort of view on how many of them have liquidated, or like to what sort of extent than let's say a year ago, or the beginning of this year?
I don't have the exact number, but I can get it for you pretty recently. Yeah. We took a look at it, but the number is
That's all right.
not on the top of my head. Yeah,
Sorry,
for
I'd
sure.
love to hear it afterwards. Though.
Yeah.
Thank you.
So you're saying the ICOs, they're putting the token in CDPs, but why would they do that to margin trade?
I'm not sure about the reasoning, to be honest with you. We've seen a few of them. We've seen from treasury wallets flow into CDP creation. We've seen from treasury wallets flow into liquidity pools. It's just like a behavior we've seen.
Okay.
So
sweet.
Yeah. Cool. Oh, we got one more.
Hi. Have you ever had any request of someone asking not to be tracked? Like some exchange asking you not to be tracked their activities?
No, actually, we haven't. We've actually had the opposite happen, especially with Binance. So Binance, we posted some stuff on Twitter about the Binance hack, and they DM'd us and they said, actually, you should be tracking these addresses. Please track these addresses for transparency, so that the community knows here's where our outflows are coming from. I guess that's an extreme example, but it's the largest exchange, right? Especially from exchanges, it's been pretty cooperative, actually. Yeah.
They make money they make money by exposing this otherwise.
Well, yeah, to an extent, yeah. Hey, I think someone there.
Hey, I'm kind of surprised by the very first slide, which has Compound V2 as such a large circle here relative to Maker.
Mm-hmm.
Maker has something like 68% of the dollar value in DeFi, but Compound has that many more unique addresses than Maker. Could you talk about that? I wasn't aware of that.
Yeah, it's pretty interesting. So these are unique addresses interacting with the smart contracts of the protocols. So obviously, in terms of overall dollar value, Maker is king, and in terms of even DAI, DAI unique addresses are like 60K plus. So this is overall, the ecosystem is pretty decent, but in terms of actual addresses interacting with the smart contracts, or actually using the protocol to do different things, this is what we saw from the on-chain data. A part of it may also be to do with factors inherent with each protocol. So more retail type interest versus more institutional type interest.
And when Coinbase did the earns for this opening CDPs, how many unique addresses was that?
I don't have it on the top of my head, but it definitely spiked. Yeah, definitely spiked. Yeah. Yeah. All right. Thanks.